Do you have any inside information from the White House on what's going on? Obviously, Steve Schwarzman plays a large role at the White House.
I have no inside information I'm happy to report.
And I don't mean inside information in
Right.
that sense. But what is going on in Washington? Why is there such turmoil, and how is it impacting your business? It surely can't be good.
Well, look, I think we're long-term investors. Our business model is premised on that. So while we try to be keenly aware of what's going on generally in Washington and even day to day and week to week, our decisions, our business decisions sort of don't depend and don't live or die on a day's events. So we're patient folks, and we'll sort of see how this plays out.
Does it live or die on legislation getting passed, however?
I would not say it lives or dies on that. It's obviously affected by that kind of legislation. And we'll see what happens.
So what legislation are you most watching out for? I mean, clearly, obviously tax reform, but also other things like all the regulations that were supposed to be rolled back. The potential for the CFPB to go away, Dodd-Frank, Volcker. All of those things will, at the margin, impact your business.
Well, we're watching it all, and in general, we, like most people in the markets, have seen a general philosophy in this administration of sort of a whatever-it-takes approach to pro-growth, pro-business policies. And at a high level, I'd say we think that's a good thing. We support that, like most people in business. As for individual parts of the agenda, it's complicated. It'll take time, maybe longer rather than shorter, it appears. Tax reform is probably the most overall consequential area for us and other businesses. And we're sort of watching and seeing what will happen.
So what kind of opportunities would you take advantage of if there were to be some kind of corporate tax reform, let's say, even if it doesn't go to 15% across the board for a corporate tax rate, even if it goes to something like 20, 25 in the next couple of years, are there ways you could take advantage of that?
I wouldn't say specific ways to take advantage. I think in general, we share the view that having a competitive corporate tax regime in the United States in the context of a competitive world is a good thing. We went from, after the 1986 Tax Reform Act, having a tax rate that was something like 5 or 6 percentage points below the average OECD country, and now they reacted to that over the last 24 years by lowering their rates, and now we find ourselves with a corporate rate, statutory rate, about 15 points below the average OECD country. So some measure to make a change there to make American business more competitive, we think is a good thing. And I think in general that would be generally beneficial to us and many of our portfolio companies, but we're not investing against any specific consequence or opportunity against that.
But you are pretty optimistic. You're looking for a nice rate of growth, not just for the US, but outside of the US as well. Bruce Richards just telling Eric Schatzker that Europe is underinvested right now. Where are you most optimistic in the world?
Well, we have a global business, and we have exposure both in terms of assets and funds all around the world.
So where are you putting that marginal dollar to work, I guess, is what
we don't have one specific regional theme for all our businesses. It's sort of by region, by sector, by business. I think it's fair to say, for example, in the real estate area, I'd say, relatively speaking, we see perhaps a bit more opportunity in the higher return opportunistic real estate segment in Europe than in the United States. Quantitative easing came later, recovery came a bit later in Europe, and that market is still a bit more dislocated from a banking standpoint, which often leads to assets being for sale.
Are you specifically looking at the cities we've been mentioning, like Dublin, Frankfurt, places in the Netherlands? Are you also looking at places like France, Italy, and Britain?
We have a pan-European business, and so the comment I made around the European markets applies broadly across Europe. You
said opportunistic real estate investments, though. I mean, is that in every country?
Not in necessarily every country at all times in Europe, but I'd say generally in the region, we're seeing that as a interesting environment for opportunistic, high-return real estate investing.
Great. Where else are you looking then? What other kinds of industries are attracting you nibbling at?
Well, I think in general, if you take private equity, a lot of what our business model depends on is looking for dislocations at a moment in time. And so, for example, early last year, the energy sector, and particularly the oil and gas sector in the U.S., was definitely dislocated from a market standpoint and otherwise. And we have a very good energy team that's been doing it for a long time with great performance. And I would say we leaned in at the point kind of at or near the bottom and made a number of investments.
Is that all played out? Because that was last year, yeah?
That was last year. Some of that, you sort of arrange deals at a moment. It takes some months to close, but over the last 12 to 15 months, we've invested actually about $5 billion invested or committed into the energy sector.
Where
and
exactly?
There are assets, for example, in the Eagle Ford, in the Permian Basin in Texas, in West Texas, where we agreed to deals, we priced deals, again, more or less near the bottom of the markets a year ago, and we feel very good about the position of those investments.
That's great. Are you looking for the oil price to go higher, or is it independent of oil prices?
The investments were made in very high quality, low cost areas that will be fine at current oil prices and fine relative to our expectations about long-term prices. And if they go even higher, we're even better off.
We need longer. Just a few minutes is not enough to hear about all of your businesses. But thank you for joining us.